We're back with billionaire value investor Mario Gabelli. So we just looked at this map of the United States of your hotspots, and there's Hudson Yards, which is here in New York City, and there's Nashville, and there's Reno. And I want to dive a little bit more into Hudson Yards close to home. There was some news today out of Bloomberg that, and Macy's popped on this, was up 2%, following a report that the retailer may build an office tower above their flagship store there. Does that go into the Gabelli Hudson Yards idea?
Well, if you read some of the annual reports of companies and they talk about their vision for that area, one of them is a real estate company, Vornado, that I happen to see the sign when I walk into this building. Basically, they highlight that. Look, the vision of individuals, and you got to applaud them, Barry Diller helping create that green mile, so to speak, that we created down there. And that is an interesting area. How do you participate in that? Yep. That is basically the screw up in New York City was the financially illiterates that didn't understand that you had to bring Amazon in. You need to create scale. You need to create vibrancy. You need to create that kind of a feeling that so that next time New York has an air pocket, they've got a whole new wave of talent. Reno is doing that. Nashville is doing that. New York has got it, but it could lose it, okay?
Wait, before we get to Nashville real quick, just on the Amazon, do you think that was a huge mistake?
Oh, come on. If you didn't think it was a mistake, you have to be financially illiterate. It's not the 25,000 people, it's the whole impact on psychology. It's the impact on the multiplier effect of people that come in. Okay, I grew up in the Bronx, and I understand the virtue of New York City. I also helped to work for a guy by the name of Lindsay on his campaign, and 6 years later, the headline says New York City's going to bust because we blew it and did not plan for the future. You did not plan for the future by doing that. Anyway, I'm not emotional about it. And I don't like Queens to begin with, so to hell with it.
Well, Amazon feels the same way as you, because in addition to those 25,000 jobs that were supposed to come to New York, doing 5,000 jobs, that is actually happening in Nashville.
Yeah,
so
but that's
just
okay.
like you, seeing that as a growth area. Well, a lot of young people flocking to
Nashville is hot because, look, 25 years ago, I went down and bought Christian contemporary music and country and western because I liked the genre. I thought with Clinton being president, it would be very helpful, and it was. So we own a big position in a company called Gaylord. Ryman owns the Opryland and Ryman. And this is attractive, and more importantly, the content is attractive. That is live entertainment because of Spotify and what is happening with Tencent and other streaming video, music. So,
Grand Ole Opry.
I've driven by it. I've never been. Have you been there?
Oh, yeah. Just went.
$80 a share, 50 million shares, 4 billion market cap. They have to do something. They can't do venues. They screwed up in Manhattan, a technical term, on Broadway, where they tried to do something. They took a $30 million write-off. They just have to romance the talent and find a way to get A&R, artisan repertoire, and figure out how to get their labels started and do it again. And that could be attractive over the next 10 or 20 years.
Talked about content and broadcast earlier. Fox, another company you guys are involved in. What are you seeing there?
Okay, we started following Herb Siegel and Rupert Murdoch and Steve Ross when they were trying to put these things together. Fast forward, we inherited that because if we owned the old Fox, we got $38 of Disney paper or cash, and we got $10 it cost us to buy Fox. They split 1 for 3, so there's 620 million shares of new Fox. They got about $5 billion of debt. And what you're going to have is a tailwind. The year ends June. So for the year ending June of 2020, they don't get the full impact of the elections, but they get a lot of it. The election is going to have 20 Democrats and 20 Republicans running for office, and the good thing is they all like TV. So there's a big tailwind. Secondly, they have a smart idea with regards to sports and news, and I think they'll do quite well. So they're having the first analyst meeting in a couple of weeks. I think they'll lay out the strategy. We'll figure that out. But on balance, at 35, 36, 37, whatever the stock is, it's, again, a split. That's a 20 billion market cap. My preference would be for you to buy Tegna. My preference is, I've liked Nexstar, but that's gone from 80 to 116. I think Merida will do something with their broadcast properties. The stock is around 55. So there's a lot going on in that area. Even Apollo is a late comer, but will do quite well in buying into the market.
And you said earlier that you like Disney if Bob Iger is running it.
Well, Bob Iger is going to leave in 2 or 3 years or 4 years.
And so I'm assuming that you think he's probably worth what he's getting paid. I don't know if you've seen Abigail Disney.
He's underpaid. Bob
Abigail
Iger,
Disney, though, has been out saying that it's insane.
It's irrelevant. Bob Iger is underpaid.
Is underpaid.
Underpaid.
How? I mean, his ratio, she says, is
That's
insane.
irrelevant. That's irrelevant. Whoever's looking at ratios.
So you think Bob Iger is doing an excellent job?
You want me to
pay him more?
You're running a hedge fund.
Yeah.
Mr. X, whose name I won't tell you, Madam X, they make 2 and 20. Okay, Bob Iger is a bargain. I don't understand how people look at numbers. They just don't get it. And then he's paying, in the state of California, he is paying 55% of his current income in taxes. That's higher than he's ever paid in his life. This is fantastic. He's helping the state fight pollution and so on.
You should move to New York City, where our taxes are even higher.
No, they're lower.
They're lower. Oh,
yeah,
New York City
California's
taxes, though. I've lived
but
both places.
But see, California's smart, unlike New York. There's no debt tax in California. New Yorkers that I talk to are leaving because they don't want to have. They have that challenge. They don't get it. We have to make New York City great again, or keep it great again.
Let's talk about another area that's very much a discussion of.
De Blasio for president. That's
yeah.
one way to- that's
Do you
one way
think?
to do it.
What do you think? De Blasio
boy,
for
that would be
president?
great.
Would you, I mean, there's so many candidates right now.
No, we'd get a new mayor.
There it is.
Come on, you can't make this stuff up.
Guys from the
Something that we talk about a lot here, obviously we're owned by Verizon, is 5G. Do you have a view on what that might do?
Yes, 5G.
Some of these content plays
come
you
on,
talk
5G
about.
is terrific. 5G. Well, first of all, I'm in the auction I'm the CEO of a public company in the telecom area. So I'm in the auction, so I can't talk about it. But independent of that, what's the virtue of 5G is if you're creating redundancy, you need cars that are autonomous, you need instant feedback, you need an ability to deliver speed on content. This is just a game changer. And, South Korea has done it.
Yeah.
The rest of the world is doing it. And I think the president is doing it right. And I think Pai at the FCC is doing a fantastic job of getting auction and spectrum into the hands of those that need it. Verizon has a focus on doing that. I think they're going to do a great job at it. But I also own a lot of the cable companies.
we have to pay some bills and take a break, and we're going to see. Are you going to leave us? He
No,
already
I
looks
don't
like
know.
he's leaving.
No,
Will you stick
I thought
around?
you were getting rid of me.
No, we want to keep you. We're having so much fun. We hope Mario Gabelli is going to be here when we are back in just 2 minutes.